Okay, let's go ahead and get started. Thank you for your patience today. This is Mary Ellen McGonagle with MEM Investment Research, and I'd like to say welcome. Today we are going to be covering how to trade momentum stocks. So let's go ahead and get started. I'll provide a little bit of brief background for those of you who are not familiar. Again, this is Mary Ellen McGonagle, and currently I have my own investment research firm, MEM Investment Research, and I work with institutional portfolio managers as well as self-directed investors. And a lot of that work involves a weekly or actually bi-weekly newsletter that reports on the broader markets. It also provides top performing stock buy and sell ideas. And then I also do a lot in the way of coursework and teaching others how to profitably trade the markets. On my website, you'll see a full course that will teach you how to profitably trade the markets, and equally important, how to keep those profits. But a little bit on my background, I do have over 25 years of experience. Most of that is Wall Street, on Wall Street, or Wall Street related. I did start out at Goldman Sachs on their trading floor, the fixed income department. That was my first experience on Wall Street, super exciting. And then from there, I did go on to actually manage $2 billion in fixed income assets for a large asset management firm in New York. And upon leaving there, I did move out to the West Coast with my then new husband, and I joined William O'Neill and Company. And for those of you that are not familiar, he is the founder of Investors Business Daily, and they have an institutional marketing division. And it was there that I was able to work with top portfolio managers, research analysts around the world. I was there for over 15 years as a vice president, so that's where I got really informed about momentum stocks, how they trade, how to spot them. And it was during this time that for each week going through over thousands of charts and studying historically big winning stocks, studying the common characteristics. And I still do that. I still go review hundreds and thousands of charts each week on the prowl for that next big winning stock. That's a part of our research here at MEM Investment Research. So let's go ahead and get started. Just a very brief, actually it's not brief, but we will keep it brief, this disclaimer. It's important that you know that we are going to be reviewing some historical precedent, looking at actually current stock charts as well. But we are not going to be providing any buy or sell recommendations today. They're strictly for educational purposes to help teach you about these momentum stocks. So let's review what we'll be covering today. The first is we'll define exactly what a momentum stock is. And then from there, we will review, I've identified at least 5 triggers that really create the momentum in these stocks. And from there, we will review how you can screen and uncover these momentum stocks. And then it's really going to be critical that you know how to buy and sell. These are fast moving stocks. You're going to want to pinpoint and know the signals. So this is going to help improve your profits with these stocks. And then I mentioned using history as a guide. And by that, we will be going over a number of examples that again are designed to help you visually see exactly what you are going to be looking for when identifying these momentum stocks. And then at the very end, we will have a special offer, so I urge you to stick around for that. So let's go ahead and start at the very beginning. I mentioned that we would be reviewing exactly what is or are momentum stocks. Now, oftentimes the stock market will be up a modest amount on a given day or a given week, but then there will be those groups of stocks that are up quite a bit more than the broader markets, and those are what we call momentum stocks. They tend to be fast moving, and oftentimes they will enter into an uptrend. And while in this uptrend, these fast-moving, what are called momentum stocks, will tend to outpace the broader markets, and oftentimes by a broad amount, a large amount. So we'll go ahead and again be reviewing some of these examples. And these momentum stocks, let's just go back to that for a minute. There are ways that you can identify them. We will be reviewing the triggers, but oftentimes these momentum stocks are very, very fast moving because they are fast growing. They have strong earnings and strong sales. There are other triggers as well, but that will tend to be your most powerful trigger. And so what are these triggers that will move these stocks? We'll get a little more into that as we move along. And then what chart patterns work best? There are some patterns that will emerge in your price charts prior to these stocks entering into these momentous uptrends. And we'll review a couple of examples of that as well. So let's start by talking about some of the triggers that will jumpstart these normally market performing stocks, and in turn they will become what we call these momentum stocks. Well, the first trigger is going to be strong earnings, and I did mention that. And oftentimes these strong earnings will be preceded by strong revenues, which then turn into strong earnings. But over my many, many years of reviewing the markets, talking about momentum stocks, these strong earnings will be your primary driver of these faster moving stocks. But there are other triggers. So another trigger that oftentimes will get a stock going is if they release what I call a revolutionary product. In other words, this is a product that has not been introduced to the market prior, but it is a product that is in high demand. It is a way, by revolutionary, it changes the way a particular, for instance, Tesla would be a more recent example where you've had the vehicle, standard vehicles for over 100 years. Now we have a very high performing electric vehicle. That would be a prime example of a company that produces a revolutionary product. And then third, of course, I mentioned that revolutionary product, and in some cases it doesn't have to be revolutionary, but it's a company that's producing a product that is in high demand. So as we go through various phases and cycles of the economy as far as consumer spending, you will see different trends emerge, and companies that are able to meet demand within a given trend will oftentimes become a high momentum stock. And then perhaps they introduce a new way to provide an existing service. So I talked about Tesla. There, of course, are many other examples that we will be reviewing as we move forward. Many, many years ago, standard restaurants were commonplace. McDonald's came in and they introduced a faster way of delivering this food. So that's a way that a company then becomes what is called a momentum stock. And then the company has initiatives. And in this case, I'm talking about a company where perhaps new management will come in and they have a plan they have discussed. They are going to revolutionize the way that they are not only producing a given product, but also how they are distributing it. And that can be another way or another trigger that will jumpstart a stock and cause it to become an outperformer. And we'll see an example or two of that as well. So let's go ahead. I talked about being able to uncover these stocks. We've reviewed some of the triggers. So by you knowing those triggers, you know that you are going to have to stay on top of earnings. It's important for you to stay on top of the news as far as what is trending, what is popular among primarily consumers and otherwise. So here are some of the ways that you can uncover these stocks as they are beginning an uptrend or beginning their momentum moves. So one of those would be up on volume screens. And for those of you that are more active traders, you could very easily put together a screen that looks at stocks on each given day that are up on above average volume. I know that for institutional investors, they would be more inclined to use a weekly screen and look at those at the end of the week, which stocks are up for that week on above average weekly volume. And that can be, again, for someone that is not as active a trader, you're more of an investor, but it will get you not only in front of those stocks, but you can then spot group moves with these types of screens as well. And that's where this industry group movement comes into play, because as you begin to run these screens, you will see themes emerge, and it will provide you with more confidence that the given move will have sustainability. So I talked about becoming a trend watcher. Some of you might find that not something that you would want to do, but it's really most importantly staying on top of the news. And there are many sources of news nowadays, so this is something that is would not be, I don't think, a burden that you for instance, a lot of the years ago when gaming first came on as important, many of you that have children, they'll help keep you on top of what is in high demand and what is so become a trend watcher. And then really using technical analysis is going to be one of the most important factors. And you will be able to use these technical analysis, again, to pinpoint your buy and sell. So this is where you can use screens with technical analysis. I have lots of other tutorials and courses that go into some of the metrics that are going to be most critical that can help you uncover these momentum stocks. We'll get into some of that today as well. So how can you pinpoint your entry and exit points? And these are just a few examples. When a stock begins its move, a big move, it will oftentimes have an initial surge on volume. So you're going to want to pay attention. We talked about screening for stocks that are coming in on above average volume, that are moving ahead of the broader market. So that initial move will be on volume. And then also overlaying indicators. This is where those technical indicators are, an analysis is going to really come into play. I tend to use three commonplace, widely used technical indicators, the RSI, which is your relative strength indicator, MACD, which is moving average, convergence, divergence, and really the most critical technical indicator for my work is moving averages. And those are really going to be critical, not only helping you define the trend, but also pinpoint your buy and sell. And we'll get into examples of these. And then lastly, you will want to have a system in place. And that system will include these technical overlays as well as other items, because these stocks are fast moving. So just as they go up very quickly in price, they are often sold and they go down very quickly. So you're going to want to have a system in place to help maximize your profits. And that's where that technical analysis is really going to come into play for you. So let's take a look. We're going to go ahead and start reviewing some various examples. And I'm starting out with a stock many of you may be familiar with. It's NVIDIA. The ticker is NVDA. And this over the last 2 years has been a really super outperformer. What we're looking at here is a daily price chart. This is a price chart that was from exactly a year ago, 2016. And you can see that the stock was a big mover during that period. But what I did want to point out to you is something that we've reviewed, and that is that the initial part of a momentum move, of an outperformance, oftentimes will begin with a gap up on volume. So I'm pointing this out. This is a daily price chart. Each bar is 1 day. So we have this daily gap up, and take a look at the volume. And this is the second time that had happened during the beginning of 2016. Again, huge volume. The stock goes on to greater heights. So that's just a visual example. And again, it is something that you can easily screen for. But pardon me, let's take a look. Now, this is a more current chart of NVIDIA. We're looking at a weekly. So each one of these price bars is providing you with 1 week of price history. This is the very same price gaps that we looked at in the previous chart. Again, this is a weekly, and you can see the volume. And again, so this is in the end of January 2016. And so each of these gaps up, or these big price moves, have occurred on volume. But more importantly, what I'm overlaying here is something that is very telling. In addition to it being an above average price move on volume, it's in response to strong quarterly earnings reports. And that oftentimes will be the item, that the event that really begins these big momentous moves. So each one of these that I've pointed out to you is, in fact, upon the release of an earnings report, the stock gaps up, and it does so on volume. So this is, again, a commonplace event for these momentum stocks. But also, I did want to point out the backdrop. NVIDIA, for those of you that are not familiar with the company, during this 2016 period and even prior to that, they were very, very important in the gaming industry they provided these CPUs, these units that are used in the graphic displays for gaming. Very high quality, very high demand. But more recently, the CEO of the company realized that the same mechanics used in those GPUs can also be very effectively used in artificial intelligence. And for those of you that follow the markets closely, it's better known as AI, and it is a very, very important momentum part of the market. Those companies that are effectively involved in artificial intelligence are really outperforming the markets. So here's a company that, in addition to putting out these strong earnings each quarter, they are also in a very, very in an industry with high demand. And they have a CEO that is effective in transitioning to the next high demand industry. So it's important to know the backdrop, what the company does, what industries they're involved in, and are those industries really strong as far as revenue and earnings growth. So now we are looking at that very same weekly chart, but what I've done here is I've overlaid some technical indicators on top of that. And I mentioned those to you very briefly a couple of minutes ago, but we can look a little bit closer here. So here's that first gap up on volume in the beginning of 2016 in response to earnings. But I like to use, this is the simple moving average. So because we're looking at a weekly chart, I use a 10-week or a 50-day, and then also a 40-week or 200-day. Those are the two for your weekly chart. And what you want to key in on is the slope. Are these moving averages in an uptrend? Is the stock finding support at that key moving average as it continues to trend up? And then also I talked about RSI, that's Relative Strength Index. It's telling you the relative strength of that particular stock. It's taking the performance of the stock over a 14, since we're looking at weekly, it's 14 weeks. And this smoothed out line is telling you, if the line goes above this net zero, that it is positive. You want that RSI to be positive. So now we have two positive signals, and then also your MACD, moving average convergence divergence. This is a little bit of a faster, but it is a momentum indicator. The black line is what you want to pay attention. You want to look for crossovers above the red signal line, but more importantly, you want it to be above this net zero. and that's positive. So in this case, you do have all three signals flashing positively, and these are the types of indicators that you're really going to want to familiarize yourself with, because they are going to fine tune and pinpoint, help you know when to get into a stock. As long as the RSI remains positive, you can remain with it. This moving average is positive, and so forth. So again, these overlays on your price charts are going to be critical for you to really profitably trade these momentum stocks. So let's move on to a different stock. Again, this is a current price chart. We're looking at Boeing. And again, a weekly. Now, the weekly is just something that I am more comfortable with. It is more telling as far as being able to keep you into a stock longer. But you can also use daily. For those of you that trade the markets intraday, these indicators that I'm using are also effective on intraday charts as well. But of course, as you drill down to a shorter term time period, you will get whipped around. You will get in and out of stocks more frequently. For those of you that are active traders, you would want to, of course, use a daily or an intraday. But in this case, we're looking at a weekly price chart. And pardon me, so what I did want to point out to you here is that in this particular case, Boeing really came to life, for lack of a better word, and hopefully you can see where it really was very much more of a back and fill market performer, but it really picked up here, and this is taking us into the end of last year. This is a post-election period. But the important thing here is this particular 1 week of activity on big volume was the release of a very strong quarterly earnings report. The company did guide higher, management guided higher, but we talked about the backdrop. And so post-election, of course, there was a lot of talk of Trump increasing spending in these types of aerospace and defense stocks, which Boeing is a part of. So you had a strong backdrop as well. But let's take a look at this formation. This is yet another way to use technical analysis, is the ability to spot these formations on your charts. And in this case, we're looking at what's called a base formation, a saucer type base, where the stock attempts to hit a new high and it does not make it. But then when it does go back and hit a new high in price, that is called breaking out of a base. And again, I have full tutorials and courses for those of you that really want to get your trading really to the next level. But this is an example. So oftentimes when stocks enter and they become momentum stocks, it will be accompanied by emerging from in this case, saucer. There are many other types of chart patterns that can emerge, but also we talked about the earnings, and then we have that RSI and the MACD confirming, and as well as your moving averages. So a lot of these are the type of names that oftentimes will make it into our weekly newsletter that we do have many clients that subscribe to that. So here, let's take a look at Tesla. And in this case, I'm using a monthly chart only because we are going back to 2013. That's the only way I was able to capture this history. So each bar is 1 month of activity. But what I wanted to point out is Tesla came out as an IPO, and for a great length of time, it just waffled. They did start to come in with some revenues, but it was not until the earnings, they came out with very strong earnings, that the company really started its momentous move. And this is a monthly, so we're looking at over a 1 year time period where the stock just continued to outperform the markets in a very broad fashion because of that report of those strong earnings. So in 10 months, it was up over 750%. And this is, of course, the type of move that you do want to capture. So here is another example, and in this case, we are looking at not only earnings, but I did mention to you that oftentimes news, whether it's news that is being released by management or news outside of the company, that will trigger these big moves. So this is Intuitive Surgical. The ticker symbol is ISRG. And this is a monthly chart. And again, I'm using monthly so that you can really not only capture just how big these momentous moves can be, but let's take a look at the trigger. I want to take you back historically. This is taking us back to the end of 2004. And ISRG is another company that came out. They came public. The stock really did not do much, but it wasn't until they reported their first positive quarterly earnings report. And that's what we're looking at here. Here we can see the big volume, and it did in fact, of course, trigger a very big move. Here's another earnings release here. But let's talk about news outside of the company. During the period that the company, they were not making earnings, but the FDA did give them approval. They have, for those of you not familiar with Intuitive Surgical, they have a robotic technology for surgeries, for different procedures. So the FDA did give them approval. But again, it wasn't until earnings came in that the stock really started its move despite that FDA approval. And so we can see that this stock did have a multi-year move, but of course, equally important, we'll get more into this a little bit later, but you want to be on alert for when that momentum and when it ends. So this monthly is, we'll get down into some weekly and daily. You can see a little more effectively when that momentum ends. Oftentimes, you're better served putting your money to work elsewhere. And so here we're looking at fairly more recent. This is 2013, 2014. Revenues started to falter during this period. It was a period when they were having lawsuits because of the robotic surgical. It was not always successful, so people were filing lawsuits. And so the company, the momentum, of course, did falter. So you do, of course, want to stay on top of not only the revenues, the earnings started to decline, and the momentum, of course, was lost. So outside news as far as lawsuits, but then also as the earnings and the revenues begin to falter, you're not served staying with the stock. So this was, of course, the end of last year. The company was in better standing, and they were starting to report stronger earnings, so the momentum was beginning to return. So let's take a look. This is a current chart. It's a company that is newer to the markets. The company name is Shopify, S-H-O-P, and we're looking at a weekly price chart. And what I wanted to point out to you here is it's not always going to be earnings. This is a company, I talked about companies that provide a new way of delivering an existing service. This particular company provides a platform for small to medium-sized retailers to sell their products online. The uniqueness with them is that it is all cloud-based. So the company has been a big winner this year, but the company has not reported any positive earnings. So there are certainly cases where the momentum will build. There is a lot of demand. There's a lot of talk about this company. It's widely, their platform is very, very widely used among startups. But so the stock has, of course, had a very, very nice move despite a lack of earnings. But let's take a look at this, the end of 2016. We talked about stocks emerging out of bases, and this is what we call a flat base. This is a weekly price chart. So you want to pay attention for that big pop above that flat base on volume. And then, of course, put that together with a positive RSI and a MACD, and that can signal a stock's entering into a very, very big outperformance and into an uptrend. So again, earnings not quite there yet, but the stock does still have a lot of momentum behind it. So here's ISRG again, and this is a more recent price chart. What I did want to point out to you is the prior, we were highlighting this period. Earnings were starting to come back in, so the stock did indeed enter into an uptrend. But let's take a look at this period, the beginning of this year. The stock price did falter. Healthcare stocks were suffering. There was an unknown there with Trump as far as how healthcare stocks would fare, but they did come on again in the beginning of 2017. So here's that base pattern that I talked about. This again is that saucer base. Stock attempts to hit a new high, pulls back, and then it's when it hits that new high here and it breaks out to a new high. It does so on very big volume. This again is a weekly chart. And then your RSI and your MACD, as well as your key moving averages, are confirming that the stock is about to enter into a powerful uptrend. So then again, you can spot these big outperformers. So here's another, this is Southwest Airlines, ticker LUV, and this is the price chart from a year ago. But what I wanted to point out here, and I mentioned this to you, is when a company, when management comes out and they talk about new company policies that they plan to put into place to help firm up the earnings and sales for that company, oftentimes institutions, they like what they hear and they will get into a stock upon release of that. So what we are looking at here is in 2011, management did come out and they talked about the different, what they were going to do as far as reducing employee count, improving customer service, and other initiatives that were going to turn the company around. So in 2011, they did announce it, but it did take, it was a 5-year initiative. It took about 3 years before the results came in the way of earnings and sales. So here's that flat base. In this case, it's a monthly because I wanted to be able to show you the historical precedents. And this is when the earnings started to come in. The results of their initiatives started to come to fruition. So the stock came in with very, very strong earnings in the beginning of this 2013 period, but again, breaking out of this base, you can see this big outperformance here confirmed by the RSI and the MACD, as well as your key moving averages, would all alert you to the fact that this stock was, the momentum was really picking up, and it was a stock that you needed to pay attention to. And here is a more recent price chart. It's weekly, and we're looking at McDonald's. And for those of you that closely follow the markets, you may know that it's been very good, particularly this year for McDonald's. They've outpaced the broader markets very significantly. And one of the primary drivers for retail stocks as opposed to earnings, an even more important metric for them is what's called same-store sales. So McDonald's did come out at the beginning of this year. They reported fourth quarter earnings and sales, and they had tremendous growth globally with their same-store sales numbers. And so that was the beginning of a tremendous pickup in this stock's price. You can see where it went on to a great advance, and the stock with the RSI and the MACD confirming that, as well as those key moving averages. Now, just as important as it is, I mentioned this in the beginning, you want to pick up these stocks, these high momentum stocks, as they begin their moves, of course, but it is equally important that you recognize when that upward momentum has ended. So what we're looking at here, some of you may remember it this is 3D systems, and there was a period during 2012, certainly 2013. These 3D stocks were very, very hot, very high momentum. So we're taking you to the end of that 2013 time period. This is a weekly price chart. So let's take a look at some of the characteristics. What does it look like when that momentum ends? Because you can see how significant and severe that downtrend can in fact be. So your first key is the stock price breaks below these key moving averages, which had been acting as support, and they do so on volume. So that's going to be, for me, I'm out if it breaks key support on volume. But you did also get secondary and third signals with your RSI and your MACD had a negative signal crossover. So this is the kind of thing that will alert you to the fact that the uptrend very well may have ended. So now you can see everything is very, very much in a downtrend. And it did have a very brief period at the beginning of 2016 where interest sparked again, but it was not quite enough to keep the uptrend going. So this is again a monthly chart, so I can show you historically how big some of these moves have. But this is Biogen, and I'm taking you back, in this case, back to 1999. And this, in 1999, Biogen did come out with their very, very first positive earnings report. So hopefully you've been able to see how significant earnings and positive earnings reports can be on these stocks moves. So this is a move that went from the beginning of 99 into the end of 2000, and it was a 1,100% move. But again, it was sparked by this first positive quarterly earnings, and it did go on to report other positive quarters subsequent to that. And then this, of course, is that bear market following the 1999 period. And what I did want to point out to you is going forward, when Biogen did come back into becoming a momentum stock. So this is taking us, again, 08, of course, 09 bear market. But what we are looking at here is that saucer type pattern that I mentioned to you. And oftentimes, the longer your base, this is a 3-year time period, the longer your move out of that base. This is just a fact. This is something that is very true. So if you can get comfortable looking at longer term charts, it can get you into these longer uptrend moving out of the base. But let's take a look. This is Amazon, of course, a very big momentum stock, a big outperformer. And what I did want to point out to you, there's a lot of information here, but I'll point out to you really the most critical pieces. So what we're looking at here is the 2012 into 2013. And again, this big move here is earnings driven. They did come out with the Kindle during this period, so it is product news. You're going to want to stay on top of that, as well as the earnings. But let's take a look here, because this is the end of 2013. The stock did report, the company reported very strong earnings. We are looking at weekly, but Amazon also during this period got into cloud computing and data storage services in addition to their Kindle products and their retail products. So paying attention to the company, what they are getting into news-wise and otherwise, really will help you stay on top of stocks that are poised to become momentum stocks. So the stock did respond to the positive news and the earnings, but unfortunately, the company in the end, the end of 2013, they came out with earnings that were below estimates. These are momentum buyers. They don't like companies that report below estimates on the earnings side, so the stock did get sold off, and you really were well served to stay out of this stock. It wasn't until the beginning of 2015 when they started coming in with strong earnings and sales again. The company also, at that time, they announced their web services had 1 million active users. The government was a big user, so a lot of good news in there with these strong earnings and sales. So when they report these earnings and sales, of course, management talks about what is going on. So you do want to pay attention to you. This is when their Amazon Web Services became profitable in April of 2015. So that really started this big momentous move beyond that. In addition to the earnings and sales, you could see that they were broadening out their revenue sources. It was being very, very positively received by the markets. And this, of course, is the beginning of 2016, that flash bear market. But then the company did go on to resume its momentum. So again, you want to pay attention to the earnings and the sales, as well as management, any kind of announcements, new products, expansion into new areas with high demand. So we've reviewed a number of examples. We can, I think, draw certainly some critical conclusions. First, of course, is knowing how to read a price charts. That's going to be really, really an important tool when you are trading these momentum stocks. Again, they are fast moving. You're going to want to be able to identify when they enter into becoming a momentum stock, and then equally important, of course, is cutting your losses. So when does that momentum end? And then also, again, this is be sure and have a system in place. That's where your technical analysis is really going to help you, and in pinpointing your buy and sell. And then know yourself. So if you are someone that's devoted, and that of course would mean that you would put the time into learning technical analysis, it really will serve you. I would advise you, of course, to do that. Those of you that have less time, subscribe to a newsletter. Certainly my weekly report, I mark up the charts identifying why they are in buy zones and why they are being added. That's another critical way that you can, of course, learn about these types of stocks. And hopefully you've picked up the fact that, of course, earnings are a key driver, but there are other critical triggers that will push these stocks into outperformance. And then I did mention to you at the end there'd be a special offer. I talked about the different technical indicators, and the one that I find again and again to be really the most powerful, not only in getting you into a stock, but helping to tell you whether that uptrend or downtrend is still in place, and that's that simple moving average. This is a course that will teach you all about these moving averages as far as which ones are most powerful on which type of chart, intraday, daily, weekly. We did review a couple of monthly. And then it has a lot of historical examples as precedents. It will really fine-tune your ability to use these key moving averages to determine when to get in and out. And then also, moving averages are the best way to determine the health of the broader markets. You want to make sure that before you get into a stock, you want to make sure that the broader markets are in an uptrend. Of course, that is going to be critical to a stock's performance, because if the broader market is not in an uptrend, of course, you don't want to be involved. I do certainly want to answer any questions that anyone might have, but before I was going to go ahead, hopefully the link for this, normally this product is $297. You can get it today for only $29, and I would urge any of you that want to fine-tune your trading to take advantage of this offer. This is a great course, and it really will bring your trading to the next level, help you find and spot these big winners, and then more importantly, exit in a timely manner. Now, let's see. I do have, Alan mentioned that you signed up for an ebook and you never got it. Alan, if you could go to my website and email me via support or directly to me, and we'll go ahead and make sure that you go ahead and get that ebook. I apologize for anything. Apple, James was talking about that, and that, of course, is a great example of a company that it came out certainly in the 90s with their laptop computers, and the innovation has not stopped with them, and that's a very great example. And then let's take a look at gaming stocks, of course, and I apologize, Paul, for your audio. I'm not getting that from anyone else, but this video or this has been recorded, so you will get a copy. You will receive a copy of this. So it's alive. This is not pre-recorded, Alan. I'm sorry. This is live. So if anyone has any kind of questions, I'd be happy to entertain and answer any questions additional right now. someone else was mentioning biotech stocks, and that's right. A lot of these biotech stocks do not have earnings, but they have products in the pipeline that are going to really propel them to outperform the broader markets. So yes, that is a very great example of stocks that don't have earnings but do go on to become high performers. And then there was another question as far as using high quality stocks. And for my work, yes, I'm all about high quality. I want to see strong earnings, strong sales, company with strong management, and so forth. So yes, high quality, of course, is going to better serve you in your trading as you navigate the markets. And then let's see some of these other questions relative to yes, fast money. These stocks do move quickly. And James, you talked about your grandkids. If they are in their teen years, they're going to be a great source for you for ideas and stocks that are on the move, because these are the consumers, the up and coming. They're going to know all about the new technologies and what's working and what's not, and so forth. And there was another question, do you follow high beta stocks? Well, high beta to me are high volatile, and many of these momentum stocks are considered high beta. That's another word for them. So yes. Another question was, do you take signals off of the daily charts after looking at the weekly and the monthly? No, I use the very, very same signals on a daily as well as a weekly as I do on a monthly. They're equally powerful on each setting. The only difference would be your time horizon for your investing. So if you're a shorter term trader, you're more active, you will want to use a shorter term chart, either intraday or daily. Monthly really is used primarily by institutional investors. They need to identify stocks that are going to have longer moves. They're looking bigger picture. So I used monthly today primarily to be able to show you history. But as far as using it for investing, it is primarily used by institutions. Pardon me. And apologize, I'm just getting over a cold, but I think I don't see any further questions. But those of you that have any other additional questions, feel free to reach out. Jim, you had a question about Steve Primo's momentum course, and I'm sure it's a very, very good course. Pardon me, but I'm not familiar with the mechanics and the specifics of that course. So it's not connected with Steve Primo. This is in addition to Steve's course. So if there are no other questions, I'm going to go ahead and sign off. And I want to thank you, those of you that did take the time today. It's very, very important to keep yourself educated so that you can really navigate these markets and really outperform. And those of you said that, thank you, you're welcome. And yes, I do have a newsletter, a weekly, it's actually bi-weekly. It's called an MEM Edge Report. You will be getting a promotion to take advantage of an offer to try that. So hopefully you'll do that.